Good afternoon. I'm Taylor Comblouzier, a mining analyst here at Red Cloud Securities. We would like to extend our thanks to Oberon Capital for sponsoring this session. Our next presenter is Scott Eldridge, who's the CEO and director of Canagold Resources. Canagold is focused on advancing its 100% owned, past-producing, high-grade New Polaris project in northwestern British Columbia. Scott, you'll have 15 minutes for the presentation, and then we'll have a 5-minute Q&A session afterwards. So please take it away.
Excellent. Thanks for the introduction, Taylor, and thanks to everyone at Red Cloud for putting on this amazing event. We've had some good meetings, and it's great to present to a larger audience now. So again, my name is Scott Eldridge, CEO and director of the company. I've held that role for 3 years. We're a gold exploration and development company, and we're focused on our flagship asset called New Polaris, which is located right here in my home province of BC. And this is a high-grade underground gold project, a past producer, and we'll walk you through the details today on the project. And timely, for today's event, we did have a news release yesterday with some down plunge extension drilling, taking the deposit another 400 meters vertical depth. So we'll talk about those details as we progress through the slides today. Sorry, there's just a delay as I change slides. So I'll draw everyone's attention to our standard cautionary note, as I may be making some forward-looking statements during today's presentation. So let's start off with investor highlights. So I'll just go back to August 2020. We had a series of corporate level events, which we collectively call the rebirth of the company. We had a 5-for-1 share consolidation. We changed the name of the company from CanArc to Canagold, and that was to further reflect our corporate level strategy that we're no longer spending time and energy on assets in the US, in even Mexico and South America. In the past, we have a very plain and simple story where we're just focused on our flagship asset, New Polaris, again, located here in BC. The project has a million ounces NI 43-101. It's about half indicated, half inferred at 10 grams, so very high grade. And we do have a very robust mine plan on the project, done at $1,500 gold in the form of a PEA. And BC, as everyone knows, is rated as one of the top mining jurisdictions in Canada and the world for that fact. So we're very happy to work in this jurisdiction. So moving along to our capital structure, we have 3 public listings: TSX in Canada, OTCQB in the US, as well as Frankfurt over in Germany. We currently have about 87 million shares outstanding. As of today, we're trading at 39 or 40 cents. So that puts our market cap at about 35 million Canadian. And we do have a fairly healthy treasury where we are financed for our current plans with $4 million in the bank. And I'll briefly mention our top shareholders. For a small company, we do have a significant roster of very well-known names, institutional investors, including the Sun Valley Gold Fund from Dubai, Eric Sprott, the Rufford Gold Fund out of London, England, our founder and chairman, Brad Cook. That's a name that many people probably recognize. He's also the founder of Endeavour Silver. He owns a significant percentage of the company. And then we have a few high net worth individuals out of Europe, as well as the US. So collectively, our top 6 shareholders control about 40% of the company. So moving on to the management team, my background, I originated out of the insurance industry, so a lot of lessons learned on risk management, and I transitioned over to the mining space about 13 years ago. I started off as an equity buy-side analyst for a German precious metal equity fund. From there, I went on to run my own merchant banking firm, sourcing institutional capital out of mainland Europe for Canadian mining companies, and that's actually how I met Brad. And then for the last 6 years, I've been on the issuer side of the business. Started off as CFO for a company called Amarillo Gold, and then from there, I've been the CEO of this company for the last 3 years. I was invited into the role by Brad. Again, many people know his name, very upstanding relationship in the business, going back over several years where I raised money for him out of Europe. And Brad is accredited with the million-ounce discovery at our New Polaris project. I'm of a financial background, as you can tell, but I am surrounded by a very strong technical team, including Brad as a geologist. But the leader on the project side is Gary Biles. He's our president and COO. He's a metallurgical engineer. Gary has built and operated 4 gold mines in his career, 3 of which were high-grade undergrounds. The most notable on that list would be Eskay Creek, where he was part of the build and then mine manager for Homestake before they were taken over. Knox Henderson recently joined us about 6 months ago as our VP of Corporate Development, and a lot of people would recognize his name. He used to work with Kodiak Copper as well as Great Bear Resources, which was recently taken over by Kinross. So nice feather in the cap for Knox and the team there. Troy Gill is our VP Exploration Geologist. He hails out of Rio Tinto. He spent about 15 years there, where he twice won their internal award for Discovery of the Year. And prior to Rio, Troy gained some very valuable production experience working at the Peak Gold Mines in Australia, which is a very similar asset to our New Polaris project. And then rounding off the management is Philip Yee, Chartered Accountant. He's our CFO. So let's move on to the Board of Directors. I won't spend too much time here other than talking about areas of expertise. So Deepak Malhotra is our lead technical director. He's a PhD metallurgist. Martin Burion is our lead on corporate governance, chartered accountant, chartered business valuationist. Andrew Bowring joined our team in August 2020 as an independent director, coming on when we made that series of corporate level changes. Many people recognize Andy's name as he's a very successful mining entrepreneur based out of Vancouver. The most notable names he's been involved with include Prime Mining and Millennial Lithium that many people follow. And then, of course, Brad and myself on the board. So let's move over to the project side of things. So as mentioned in the introduction, we are a gold explorer and developer, and we do hold a portfolio of gold projects in BC as well as Nevada. We do spend our time and attention on our flagship New Polaris, and we'll spend most of our time here today chatting about New Polaris. But in terms of our other properties that are more on the grassroots side of things, if we're not spending money and investing on in those properties, we do look to monetize them and create shareholder value. And we do that by optioning them out to other companies. So collectively, this portfolio of option projects, collectively, it pays for our corporate level G&A on an annual basis because we do receive cash share payments from our optionees, as well as they have commitments on minimum annual property expenditures, as well as we keep a royalty upside for the future. So again, any money that we raise goes directly into the ground at New Polaris. So a brief history on New Polaris. This is a brownfield site, so it does enjoy many benefits of being a past producer. There was production here during the 30s and 40s, and the old timers were mining underground at a grade of 10 grams per ton. And throughout the production history, they recovered about 250,000 ounces of gold in the form of a gold concentrate. And they would barge the concentrate out to a smelter down south in Washington state. So fast forward to today, what do we have at the project? It's 1 million ounces, NI 43-101, half indicated, half inferred. We also have a grade of 10 grams per ton. And I will point out that's the diluted grade. So we've already accounted for a 20% mining dilution rate. So that represents true head grade to the mill. And we run the economics on the project in the form of a PA at $1,500 gold. And because of the grade, this is a very robust project. Myself being a numbers guy, I like to look at after-tax IRR. We hit 56%. The NPV is over $300 million US, but only with a modest capital cost of 110 million US. And what really differs from the past versus the scale of the project is the actual metal production. So rather than a concentrate, we've taken the flow sheet one further step ahead. And working with Autotech, we've designed a flow sheet that would allow us to produce doré bars at site called bacterial oxidation, or also known as BIOX. And this step in the metallurgical process eliminates the relationship with a smelter, which would literally erode a quarter of the gold price away at these high metal prices. We don't want to see that. So this would allow us to produce doré bars on site. It's used at 10 commercial scale mines around the world, including Fosterville down in Australia. So this is a well-known process. that's how the PEA was designed, and that's how we will move forward with the feasibility study, which we plan to commence during the second half of this year. So let me give you a more accurate depiction of where the project is located. It's the northwestern corner of British Columbia. And typically we access the project in and out through a town called Atlin, which is just to the north of us. So once you're in Atlin, you can either take a small fixed wing aircraft or a helicopter, and you'll be at the project in under an hour. It's an off-grid exploration camp at this point. It can house 20 people at a time. And since May of last year, we commenced a significant infill drill program, running 2 rigs on the site. We've drilled about 30,000 meters in the last 10 months, and I'll walk you through some of the results. And as you can see from the map here, this is a mining-friendly part of the world, both on the BC and the Alaskan side, where there is several commercial scale mines around us, including Kensington, which is owned by Core Mining, and Greens Creek, which is owned by Hecla. There is placer mining in the area here, and there was a gold rush here in the Atlin mining district going back to the Yukon gold rush days as well. So in terms of the actual ownership, we own this 100%. We control the mineral rights as well as the surface rights. And just to briefly touch on geology, I imagine there's some listeners in Ontario, of course, but this is a mesothermal gold system. It's not typically seen in British Columbia. However, it is very common in the Red Lake camp of Ontario. And we'll speak about some analogous deposits where we see a lot of similarities to what we have here compared to some very famous mines in Ontario. So moving on to our resource table, we have about 1 million ounces combined of indicated and inferred. And the drilling that we've been working on, again, that 30,000 meters, has primarily been focused on infill drilling the inferred. So essentially the inferred is about 40-meter spacings. We're tightening that down to about 20 to 25, just to galvanize the inferred and move it up to measured and indicated, as that would be the future basis for proven and probable reserves once we do a feasibility study. So the infill drilling has been going really well. We've hit mineralization on every one of the 32 holes reported to date. We've drilled a total of 54 holes, so we still have a significant number of results pending. So if we're not on your watch list, please add us, and you'll see news releases in the form of high-grade assay results probably every 2 weeks for the next 3 months. And in addition to the infill drilling, with a mesothermal system, there's always opportunities to add ounces, whether that's parallel veins or perhaps the down plunge extension of the main vein system. And we've started to see a lot of that in the current drilling. This is a mugshot of Troy Gill up at the site. Again, he's our VP exploration, and you can tell by the vegetation this was taken in the summer. Again, we started drilling in May. Troy is generally not an excitable guy, but it's hard to wipe the smile off his face here, holding a 50-gram sample over almost a meter. And this is indicative of a lot of the results that we've started to see since we got assay results out to the market in July. Again, we've hit on every hole. There's been some spectacular results, not just with infill drilling, but with resource expansion type drilling, one of which returned 17 grams over 8 meters. So we've been very pleased with the results, and there's definitely more results to come. So this is just an overhead plan view of the project, and this sort of puts into context the scale here. Given that this is a high-grade deposit, this would only be a 750 ton per day mill. So our drilling footprint as well as the operational footprint are very, very small. And in location compared to sort of proximal to the airstrip, you can just see how easy it is to drill here. We move the drill around with a dozer, not a helicopter. And we'll talk about some of the holes mentioned here in the map that were published yesterday. So as I mentioned earlier, we have 1 million ounces at 10 grams. And interestingly, even though that's a high-grade, robust deposit, it only goes to a maximum vertical depth from surface of 600 meters. And for a mesothermal system, most people would know that's fairly shallow. So it's never really been drilled at depth until the results we published yesterday, where we've shown mineralization that would fall within our cutoff of the resource down plunge to an additional 400 meters below the current boundary. So again, the current resource only goes to 600, and we now have drill intercepts going to the 1,000-meter vertical level. There's definitely not enough drilling between the 600 and 1,000-meter level, but this was a more of a proof of concept type drill campaign where we just wanted to test that blue sky potential. And we've now demonstrated that with results that would fall within a mine plan. So we've gone from the unknown to the known, where yes, we know the system extends at depth. So along that same topic of resource expansion, we do have a couple of parallel or on echelon veins that sit in the hanging wall of the C-West main vein. The C-West main vein is the yellow vein you can see here on the section. And then just above that in pink and red, we have the C9 and the C10 veins. So yes, we knew these veins were there. Yes, there was some previous high-grade intercepts on them, but no, there are no contained resources in the C9 or the C10. And as a part of this current drill program that we started in May, we've seen some very, very high-grade, spectacular results out of the C9 and the C10, which includes 17 grams over 8 meters, 11 grams over 18 meters. That's an amazing intercept for an underground deposit. So we're very optimistic here that we have the opportunity to add ounces and tonnage to the resource in the parallel veins on this slide here, in addition to the previous slide where we know that it does extend at depth. So we feel that the 1 million ounces at 10 grams is a base case. And even though we are a development story, we certainly still do have a blue sky component that the 1 million ounces will most certainly get bigger. So this puts everything I've sort of explained into a more general context where you can see where the old timers were mining. Again, during the 30s and 40s, the upper brown area here, you can see some of the old stopes and the underground mining infrastructure, and they only mined down to approximately 250 meters below surface. They were very focused on cash flow. They weren't investing in exploration. And then when Brad and the team picked up the asset, Brad had the vision to be inclined to drill this out at depth. And lo and behold, he discovered the additional 1 million ounces at 10 grams, which is the large yellow area. And then the down plunge extension area, this is our interpretation. This is not resources, but this is our interpretation of what the down plunge extension could look like. And we've confirmed that yesterday with those 2 deeper holes returning mineralization. So we're pretty optimistic that this can grow at depth in addition to those parallel veins that we already talked about. So why are we so optimistic about the opportunities to make this project bigger? Again, we look at analogous deposits in the Red Lake camp of Ontario. And the point of this illustration here is just to demonstrate that these types of deposits can typically go for 1,000 to 2,000 meters below surface. But again, our resources only go to a maximum depth of 600 meters. Given our grade, we certainly like to brag and boast about that. Our grade is about 7.5 times the industry average, which is obviously skewed to larger open pit projects. And we all know the proverb, grade is king. That proverb absolutely resonates true on this project. And I would also point out that we have that dual-edged sword of high grade and low cost. The industry average all-in sustaining cost is about $1,000 an ounce right now, plus or minus. And we'll talk about our PA results, but our all-in sustaining cost is $530 an ounce, being about half the industry average. And we're seeing more of these, high-grade type deposits just become more and more rare. And to put the grade in context, if this were a mine again, it would be the 6th highest grade gold mine in Canada and the 11th highest grade gold mine in the world. So moving on to the PA results. We have a production profile here of about 80,000 ounces a year over an 8.5-year mine life. And our ultimate goal with this drilling, where we're seeing these resource expansion opportunities, is to impose that into a direct knock-on effect and increase the production profile. So what we would like to see come a feasibility study, again, which we would start at the end of this year, is to deliver 100,000 ounces a year over a 10-year mine life to get to that 1 million ounce reserve. The general M&A audience, investment bankers, analysts, institutional investors, that's sort of a metric that a lot of the audience looks for, and we're only 20% away from that. We would only need a slightly larger mill at 950 tons per day. And we do have a relatively modest capex of only $110 million US. So there's definitely some buffer there with our huge margins on the production side to have a slightly higher capex for a better production profile. So lastly, I'll wrap it up here with peer comp, and whether you prefer to use PNAV or enterprise value per resource ounce in the ground for a development type story like this, you'll probably come to the same result, that we are undervalued compared to our peers. And by our peers, I mean projects that are at a similar stage of development and they're either in Canada or the US. Our enterprise value per resource ounce in the ground is about $20. And we feel the way to correct that and start to gain ground on our peers is to deliver at the asset level. And that's exactly what we've been doing since we started drilling in May. And again, I would encourage you to watch our news, as there will be more high grade results coming. So very lastly, in conclusion, obviously we feel there's relative upside compared to our peers. We've got a great asset in New Polaris. However, we always do have our eyes and ears open for acquisition ideas. New Polaris is a great project. Again, it would be the 6th highest grade gold mine in Canada if it went back into production, and we're taking it towards a feast to de-risk it. The permitting is going really well, full support of the First Nations group. And as you saw from our management and board, we have a team of doers, achievers, plenty of accolades behind our name in the mining space. And we have a relatively strong cash position here at $4 million. So we're currently funded for our plans in the short term.